Hey guys, and welcome to the video. Today what I'm going to be covering is how I made more money in one trade than I did working 40 hours at my job this week. And it was the first time I've actually done this in my trading career. My 5-year anniversary is coming up on August 1st, so I'm at the time of this recording in just a couple days. So I was able to get it on recording here, and I thought it would be helpful to some people if I did a full top-down analysis of really just everything. One, how I derived my bias for the day. Two, where I knew and when I knew for a trade to form. And at what area of interest I was using, and really just how I was reading price within this segment of price action right here. And then lastly, my emotions going into it, what I was feeling during the trade, and just how I was able to manage them. So yeah, we're gonna be doing a full top down on the stop loss, entry, take profit, the whole shebang. So this is it right here. You can see that the take profit is above some equal highs up above. And so this trade was taken just before 9:30 opening. You're going to see that delineated with a 9 or with a vertical line at the 9:30 a.m. price, and you're going to see the candles start to get a little bit sporadic here due to the 9:30 a.m. volatility. So that should be happening any second here. Right there, you can see a dramatic increase in the size and wicks of the candles. Have an initial move down, and then we start to go higher towards all my targets. Smack those, and then that was it for the trade. So let's go ahead, head over to TradingView and really dive into the full top down here. So I wanted to show that recording first, by the way, because I don't want people to look at this and just think, oh, this is hindsight BS. We're in, replay trading on TradingView. The trade was taken live. It was, real money that had been made. So that was my reasoning for showing that. But anyways, the trade was taken on a Thursday right here. So you're going to see that marked right here. And I have some drawings on the chart right now. And the reason I have this is because I just want to walk through price just very quickly on how I was able to derive my bias for the day, because that is one of the most important things, um, is knowing where price is drawing towards as opposed to making sure that your entry is perfect. Okay, so that is something that is really important that I've learned. But my idea going into this was anticipating that the low of the week had been made on Tuesday, and so weekly profiles told me to expect, since Wednesday had expansion following the Tuesday low, to expect expansion on a Thursday as well towards targets, because my main draw on liquidity was these equal highs that had been made on Monday. So that was my main draw on liquidity for the entirety of the week right after these had been made, and I really liked how we had this really big impulse move down below, sweeping a daily low on a Tuesday into a daily fair value gap, um, and into this daily wick midpoint that I'm going to be covering on the daily chart as well. We had SMT at these lows going into Wednesday. Price action began to favor longs by disrespecting bearish PD arrays and respecting bullish PD arrays. And then we traded higher right here, and we still had not taken these equal highs going into the morning session on Thursday. So that is what I was looking for. And I also really liked how overnight during Asia, we left Asia session high liquidity right here at this daily equal high. So tons of buy side liquidity resting up above here. That was just my obvious target for the day. I use the hourly as like a really, um, it's my time frame of measuring order flow compared to like a weekly basis in finding out what is the current weekly profile that we are trading in. So what I have pulled up right here, we are up to the 7 a.m. Eastern time candle right here. And what I was noticing was that we were trading into this large 1 hour fair value gap right here. And the first thing that I notice is when I draw this out is this midpoint right here and how we're respecting it. But there's also some other important areas that are within this level right here, is this daily order block. So I want to head up to the daily time frame here. We're kind of working backwards, but I think it's a little bit easier this way. We're going to head up to the daily time frame and I'm going to show you what we're looking at. So if we take a look at this down close candle right here, this is Tuesday's close, and this is the candle that made that anticipatory Tuesday low of the week right here. And what I really liked how that this was a daily order block as well. And the reason it was, in my opinion, is because we have this daily fair value gap right here that I wanted to see price respect to continue higher. It did. What we did was we made a swing low in here, right? So this low is the lowest low in between these two lows, these two daily lows, so that makes this a swing low. What it did was it went and hit the midpoint of this daily wick right here. That was in line with this daily fair value gap. And the most important thing to me to help determine what is like the characteristic of price and if I'm expecting really bullish or just, it's my way of measuring like the behavior of price is what did the bodies do in relation to this imbalance right here, right? You can see that this down close candle in a buy program went into this fair value gap and the body closed well above the high of that fair value gap. The wick did the damage right there, didn't even touch the low. So really what I'm looking at is the bodies and if it can respect the midpoint of the fair value gap. And it did significantly, right? It was very easy. So this tells me that this order block is true. It has a lot of strength to it. So I marked this right here with this line and use this the remainder of the week to look for trades. And if you are watching this, I would also take a look at Friday, July 25th, because you're going to see that even more trades formed at this level right here. But we're talking about Thursday right here. And so we're going to go down to the lower time frames again and dive into it some more. So now we're hanging out on a 15-minute time frame here. I'm going to take off this hourly fair value gap because it takes up a lot of space on the screen and I think it just makes it a little bit messy to look at. So just know that this was an area where I was looking for trades and a reasoning why I was looking for bullish price action to originate down here to target these Monday equal highs. Okay, so I'm going to take this off. And the next thing that I do is when I'm on my 15-minute time frame is I'm just looking for areas of interest as far as like my session liquidity goes. And really I'm looking at Asia high and low and London high and low. And if I'm bullish, what I want to see is one of those session liquidity lows swept to target my higher time frame liquidity. Okay, so if we take a look, this is Asia low right here, and I can actually take out my little indicator right here that marks these. Is Asia high forms between 9 a.m. to midnight, or excuse me, 8 a.m. to midnight, and so this was the Asia high that was made in between that time frame right there. And you can see that session liquidity failed to go and take out the Monday high. Instead, it generated or engineered more equal highs there. Asia low wasn't really of significance to me. London high had already been taken, and then we have London low hanging out right here. So this London low is still untouched. Everything else right in the middle right here was already occupied, and this is what I liked as a draw on liquidity. So if I'm bullish, like I said, I want to see a dip lower in order to go higher. What do we have resting below London low on the higher time frame that matches up with this level of liquidity is that daily order block opening price right there. Okay, and we're also within that hourly fair value gap. This is a 15-minute fair value gap right here as well. So those are converging, and high probability order blocks also have fair value gaps going through them on a lower time frame. Okay, so if you notice on the daily chart, there is no fair value gap that is in line with this daily order block opening price right there. High probability order blocks, if you go down to a lower time frame, are going to have an imbalance through those. So you can see it has that on the hourly and on the 15-minute where I'm looking for my trades to originate from. Okay, so that was what I was looking at here was this London low. I'll mark it out. And you can see that this is a really easy and straightforward process, right? That is why deriving a bias and figuring out where you want to see price go, it does not take a long time once you have a, written down process of what you do step by step every single day, right? Like this bias was formed within 5 minutes. It's only taken me about 10 minutes to walk through it in greater detail right here, but it's a very easy process on how you can find the direction of price. And if you find that it's not easy, then it's probably going to be a low probability day because either you're trading in the middle of a range or you can see price going either direction. And right here, can you see why price would want to go lower all the way down here? No, not really. I mean, it's already done the damage down here, and we already determined that weekly profile, and this liquidity is still in place, right? So there's no reason for us to want to go lower on a super, like, significant downturn, right? We want to see price go lower in order to go higher, kind of like on the shorter term. Okay, so if I fast forward price action right here, we can see that on this candle right here, the 8:30 a.m. 15-minute candle, London low has finally been taken. Okay, so now at this point, what I'm doing is I'm going down to my lower time frames, and I'm really going to be scoping out certain signatures in price that's going to tell me that there's been a smart money reversal and look for that change in the state of delivery. So let's go ahead down to those time frames and look at those here. So we can see very clearly we're on the 1 minute time frame here right now. London low has been swept. We haven't quite touched the daily order block opening price yet, but we have these equal highs up here as our primary target for the week. That is our draw on liquidity. You don't need to hold the trade to go hit these levels because that's asking a lot, but you just want to use these levels as the overall draw on liquidity. And then what I like to do is have some lower hanging fruit targets of like inside the range right here, which we're going to be talking about. Okay, so if I fast forward price a little bit, what I look for in the three PD arrays to help me determine if there has been a change in the state of delivery and a shift from a sell model to a buy model or vice versa is the following. It's going to be your inversion fair value gap, your order block, and your breaker, and it's usually going to happen within that order. Okay, now these are great PD arrays to look for when, again, you're looking for that change from a sell model to a buy model. And what do I mean by that? Is price going lower to higher, very simply. But that is just a very like elementary way of describing it. But what you want to see is, again, that smart money reversal. But when we're talking about buy and sell models, you use the framework within those to manage trades, your entries, determine where PD arrays should form, when to expect aggressiveness in price or speed in price versus where to expect potential consolidation. So it's a very, very strong and very useful concept in order to manage your trades and do all those things that I just talked about. Okay, and where I expect those models to form is at when they're in alignment with higher time frame PD arrays and also at session liquidity, which is why session liquidity is one of the main areas of where I look for my trades to originate from because they're so high probability. So what we're going to be looking for is, again, those very things right here, and I'm going to show you when I decided that price was ready to go, when I trusted that a reverse had been set in place. What we have right here is we have touched this daily order block opening price now, and these two down close candles is what I was looking at. Okay, what do we have within these two down close candles is also an inversion fair value gap. What is it right in alignment with is the daily order block right there. Okay, so to me that was extremely meaningful. An aggressive entry would be an entry off of this candle right here or on this order block. And The reason I say it's aggressive is because this is a trade that forms before 9:30 opening. It's not something that I normally do, but what I was noticing on the characteristics of this week was the trade formations or reversals were happening before the opening, and then the opening price would just rip towards the draw on liquidity. And so I recognized that behavior. I saw that this was, potentially happening again right here, and it was a very this trade had so many confirmations for me, so that's why I was willing to put the risk behind it. So I'm not trying to guess which PD arrays are going to form or are going to hold. What I want to be doing is just watching price and seeing, are we going to be respecting those PD arrays and disrespecting bearish PD arrays. Okay, so far we have disrespected a bearish PD array after sweeping session liquidity and hitting a very significant level for me. So now what I need to start seeing is price respect bullish PD arrays, because again, remember, this is a 1 minute time frame and we're talking about higher time frame levels, and on the higher time frame within this leg, we've only been going lower. So we want to have that real confirmation that we are going to be having that smart money reversal. Okay. So I'm looking at this opening price right here, and I notice that the very next candle at 850 goes down, hits that order block, and then has a nice rejection and keeps on moving higher. And so I like the reaction I'm seeing right here. We go into it again, and once again have a nice reaction higher. The bodies are really respecting this level, and the wicks are doing the damage down into it. Okay. So we keep on going. And then at this point, once I see this 1 minute order or 1 minute fair value gap form, now I'm saying, okay, this is very likely going to hold. I think this is a high probability order fair value gap right here. This is something that I am willing to enter on. I also want to walk through some other things that happened here. Is within this leg lower right here, I'm looking at all of the bearish PD arrays within here, and if you notice and look at all the fair value gaps within this leg, like this one and this one, they have all been disrespected, right? And now we're starting to see bullish get respected. So at that point, I'm really liking what I'm seeing right here. And now we have our first bullish fair value gap on the 1 minute time frame that I want to see start to hold price. So I'm going to mark this out right here. And now we really have a good framework for a trade and a lot of things telling us that we are likely to go higher. If we take a look with this order block and change in the state of delivery again, it also has a propulsion block. A propulsion block is an order block that digs down into another order block. So we know this is our change in the state of delivery. What did this down close candle do? It went down into that change in the state of delivery and had displacement away from it. So this is your last down close candle. Where my stop is going to be is below this low. I do not want to see price go back below here. Why? Because we have a fair value gap and we have an order block. Okay, so that was my reasoning for my stop loss right there. Now, if we start to talk about targets, which is one of the most important things because it's one of the things in trading that you can control. You can control your stop loss, your entry, and your targets. But after you enter the trade, you cannot control anything besides your take profit and your stop loss. And that's where, the real psychological game is in play, right? So I want to go over my targets here and why I chose them. So this 830 high right here, this was important to me because there was 8:30 a.m. news for this day and this high had been untouched. So this to me is a data high. A data high has a lot of liquidity above or below it, depending on which part of the candle you're obviously looking at. Data low had already been taken right here, and we had this move lower. So this was my first major draw on liquidity right here, was this data high. If we keep looking higher within this entire leg down, Where are the equal highs? Right here. So equal highs are a really, really high probability target for me, and I absolutely love when they're in the overall draw on liquidity for me. You can see that again, Monday equal highs are up here. It's asking a lot to be, this right about price. It's, we're talking, well, in the grand scheme of things, 70 handles is not a lot, but if we're taking a trade right before market open, I do not want to be personally too greedy. If I can find targets within the range, then I am happy to do so if it still offers me a good risk to reward. What is above these equal highs right here? Well, obviously we have this high, and this is your pre-market high. So to find your pre-market high, you want to delineate 7 a.m. and find all your major highs and lows that have been untouched before 9:30. Okay, so right now this is your pre-market low, and this up here is your pre-market high. So that was like the major part of the range right here is this pre-market high to this low right here. So if we take a fib from this high to this low, now we can start getting our quadrant levels here. And I'll tell you why we do that. Quadrant levels are extremely important in my trading because they help me determine a couple different things. Where can I expect PD arrays to form? Where do I want them to form to give me that confirmation that I'm trading the right one? Where can I expect potential consolidation? And where can I expect price to tell me that my targets are very likely to get hit or they're maybe not likely to get hit and have some lower expectations? Where can I expect to see speed and velocity and price? So all of these things are things that you can determine based on how we react to these levels right here. Because again, the framework of this trade is a market maker buy model. We have our left side of the curve, and now we're anticipating the right side of the curve. Your low risk buy in a market maker buy model should form around this 25% level. So you're going to find your high probability PD array at this level or below it. So your very discounted ones are going to be at or below this level. And you can see that we've already had our inversion fair value gap and change in the state of delivery. What else is it in line with? London low right here. Okay, so I'm getting in on a little bit of um, a premiumed entry compared to this lower quadrant level. We're still in a discount because we're below this orange line, which is equilibrium. So we're still in a discount. Okay, so that is something that I really like and why I'm okay with it. My stop loss is below the propulsion block right here, and it's also below the 25% level. But now, what about targets? Data high is right below this upper quadrant level. The equal highs are right at this quadrant level. If I go to a 5-minute time frame right here, we also have this 5-minute SIBI right here resting right above data highs. So this is where I took off 10 contracts in the video that I showed you at the very beginning of this video. That because of those things aligning, the 5 above the data and aligning with the 75% level, okay? I did not aim for this pre-market high, and if you watch it back, you'll see that this high actually did not get hit. Why? Why did I not aim for the pre-market high when my overall draw on liquidity was all the way up here? If we take a look at this high, what did it do? It did the damage above these highs right here, which is London high. It's right around that 5 a.m. time right here. And we went down, went up, took out all the buy side above here, and then went lower. So this high had already done the damage. And that doesn't mean that it won't go and get ran again, but to me, it's a much lower probability high to get ran as opposed to something that had made equal highs and is within the range right here. So that is why I targeted the data high, because it was below the 5-minute and at this level, and also equal highs right here. So really my ability to determine high probability targets is what made me able to bank on this trade, because if I just held the full thing for the pre-market high, it would have been a break-even trade and I probably would have been really pissed off. Um, but that's why it's really important to not get greedy. The last thing before we start to walk through price is I want to talk about timestamps and discount levels according to specific time levels. And if you can see right here, there's a little bit of a blob, but it's because they're overlapping. Is true day open slash midnight open and 8:30 a.m. open are at this level. So 8:30 a.m. is right here. That's that opening price extended to the right. Midnight opening is right here. So extend that all the way to the right. If you buy below those levels, you are in an extreme discount. If you buy above them, or if you sell above them, you're selling in an extreme premium. So it's another confluence added to my trade when I'm buying below these levels, because it's telling me that I'm buying it at a discount, which is really good, especially when everything else is aligning right here. So let's start to actually, get through this trade. Right now, at this point, I'm entered in the trade. We created a little SIBI right here, so I was looking at this to see us close above that to really get going. What actually ended up happening was we consolidated for a really long time, and this is when it was like a really tough mental battle for me to withstand this time distortion, is because I really thought we were going to get moving once we respected this bullish fair value gap and disrespected this bearish one. I thought that was going to get us going. But once I saw this consolidation happen right before 9:30 a.m. open, I was a little bit nervous that my stop loss was going to be too tight. So let me actually get this on right here. I was a little bit nervous my stop loss was too tight below here, because it was going to have to withstand most likely the 9:30 a.m. open if we kept hanging around in this area too long. But what ended up happening is you'll see that I had this BISI marked out. It traded through it and closed below it. But that's okay, because we had this propulsion block right here as well, and you can see that we tapped it. Bodies are respecting it, and we begin to move higher. And what is in alignment with this is this little 1 minute fair value gap right here as well. And you see me mark that out in the video. So as long as we hold that and this propulsion block, my stop loss should be good. And then we finally start to see price move in my direction now, right before 9:30 open. So once I saw these two candles, I was able to, be a little bit more relaxed within this trade, and I felt really relaxed once I saw these two BISIs, or these three BISIs being made. And I'll tell you why. Is because I anticipated this to be a breakaway gap, and you'll see me move my stop loss to my break even level, is because this is something I expect to stay open, because we had just left this consolidation right here. So we took this low and went higher, leaving multiple fair value gaps. So whenever we do that, I expect the lower one to act as a breakaway gap, meaning I do not want to see it get filled. It can tap into it, but I don't want to see it get filled. And then we have 9:30 a.m. opening coming up right here. We tap those timestamps right there. You can see the reaction away from it. Big move lower, big wick down into the very high of that breakaway gap, but again, does not go into, or does not fill the entire thing. And then we get that move higher to hit all of my profit targets. But you can see that we actually end up not hitting that pre-market high. It ends up engineering more equal highs, and then it ends up kind of being a lot of consolidation until we get a nice 10 a.m. reversal. So that was my entire reasoning for the trade, my entire framework for it. So I hope you guys found that helpful. It is, a lot of years of experience all coming together into one trade right here. So if you did find it helpful, please subscribe to the channel. Feel free to join the free Discord where I am alerting a lot of trades and giving a lot of free insights of market analysis every day and trade breakdowns. So yeah, link will be in the description for that. That is free. And yeah, until next time, guys. Appreciate you watching.